You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 14th day of May, 2020. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you cannot see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days that you're out of the office, away from the desktop, not to worry, point any internet connected browser to youtube.com or make that cfrn.net/live. I said that for so long, still in my memory bank. cfrn.net/live, and you'll find a live real-time simulcast of the show as it unfolds. Also, during the show, we stream in real time on Facebook, Twitter, and YouTube. Now, sorry I missed you yesterday. Over the past 15 years, I've tried not to. I'm getting a message from Michael that he can't hear. Can the rest of you guys hear me? Get a tick in the chat box. Yep, they can hear me. Okay, but Michael can't hear me. Okay. All right. Well, anyway, welcome to the show. Sorry I missed you yesterday. But here we are today. So let's open with a word of prayer. Father, we thank you for all of your blessings, your mercy, your grace, even in this time of uncertainty and sorrow. God, we pray that you be with the families of those who are sick, those who may have passed, as they worry and grieve. God, defend them from illness and despair. We pray that they would know your peace. God, be with the doctors, the nurses, the researchers, and all the medical professionals who seek to heal and help those affected and who put themselves at risk in the process of doing so. We pray that they would know your protection, they would know your peace. And we pray you would be with our leaders, all nations, all cities, all communities. Give them the foresight to act with charity and true concern for the well-being of the people that they were duly elected to serve. I pray, God, that you would give them the wisdom to invest in long-term solutions that will prepare us for or prevent future outbreaks. May they know your peace as they work together to achieve it here on earth. Whether we are home or abroad, surrounded by many people suffering from this illness, Father, we just pray that you would stay with us as we endure, as some of us mourn, as we all persist and prepare. And God, we ask that in place of our anxiety, that you would give us your peace, the peace that surpasses all earthly understanding. In Jesus' name we pray. Amen. Okay, guys, let's take a look at a chart. Let's go to the S&P 500 Emini daily chart. So, when we had the big sell-off on Tuesday afternoon, we were during the show. If you didn't see the show on Tuesday, you can go back and watch the video at youtube.com/CFRN. We record every show every day. And so during the show we had two little dojis. We had a doji on Monday, we had a doji on Tuesday. And what I said on the show Tuesday was that if Tuesday's daily candle took out the low of Monday's candle, then we would most likely head back to test the BBC. I had no idea that it was going to happen literally within an hour of me saying that, but it actually did. And I said if the BBC holds as good support, we went through what would happen, where we would potentially find resistance, etc. And then I said, if it doesn't hold, and we expect it to hold, because it holds more often than it doesn't. Held here. At some point, it's not going to hold, and this was the point it did not hold. So we dropped below, and the area that I had highlighted based on two things: the structure of the market, in other words, the most recent swing low, and the 24% fib from the pandemic swing low to the most recent recovery high. The 24% fib also lined up with this swing low that held at the fib. And sure enough, that's where price has come, found support, and bounced. Is that magic? Am I clairvoyant? Can I read tomorrow's headline today? No. There's no witchcraft, there's no voodoo. It's simply understanding the very basic manner in which markets work. Price always trades between areas of support and resistance. Now, that would just send the market in a straight channel across your screen if it weren't for the fact that the market is always seeking out new areas of support and new areas of resistance. So it will hold, it will hold, it will hold, and then it doesn't hold. And then we find a new area of support or a new area of resistance. And a game of Pong, for those of you that are old enough to remember what I think was actually the very first video game, the one that you played on your TV on the home console. I think they even had arcade style games in some pubs before there were even arcades. It was a very simple game where you control the paddle on the left and the person you were playing control the paddle on the right, and this little, what was supposed to be a ball, would go to the right and you would block it and it would go back to the left, and you would either block it or not. If you missed it, well, you get the idea. So that game of Pong, if you remember that, if you don't remember it, I bet you can find a video on YouTube. It was the earliest, most simplistic type of video game, but it'll instantly, if you watch that, if you've never played Pong, you'll understand that this is the ball or the puck, and these areas are the paddles. The paddles slid into place and sent it back down, sent it back up, back down. You get the idea, because you are the smartest audience in radio. So let me give you the numbers from around the world, then I can message Michael to come in and do his recap, because he says he's not able to actually hear me, but all of you guys in the chat box say that you can hear me, so that's a good thing. Currently the Dow is down 16 points. The NASDAQ is down 81. S&P 500 is down 13. The Russell 2000 is down 21. The only, well, we got two movers and shakers. The NASDAQ's down almost 1%. Russell 2000 is down 1 3/4%. In the commodity basket, crude oil up 76 cents, trading 26.05 last. It's a 3% gain. Gold up $25, trading 17.4210 last. It's a gain of about 1.5%. In the Asian markets at the close, the Nikkei dropped 352 points, 1 3/4%. Shanghai lost 27, 1%. And the Hang Seng dropped 350, that's 1.5%. And in the European markets at the close, the FTSE down 162 points, it's 3%. The DAX down 205, 2%. And the CAC down 71, 1.5%. Gives us a red day in Asia, a red day in the UK. And so far, it's a big red radio Thursday here in the US of A. Let's go to Michael and get a recap of everything that happened in the live training room this morning. You send him a message to come on. I'm going to hit mute. Michael will come on. He'll do the recap, and then I'll be back, and hopefully we'll
Okay,
talk to John.
good afternoon, everyone. I'm having problems with my headset. So I'll just go through what I always go through and show you the results and all that stuff. Okay, and then when I'm done, Dwayne can come back on and finish up. Okay, so here we go. Good afternoon, everybody. Today is Thursday, the 14th day of May 2020. Today we made 10 ticks in the euro, 3 ticks in crude, 39 ticks in gold, and 17 ticks on the ES. Put us at plus 695 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took 16 trades today, so we took a lot of trades. Now, on the month, we're at $3,327. That's over 10 days, averaging $332 per contract per 2-hour day. On the year, we're now at $33,662. That's over 88 days, averaging $382 per contract per 2-hour day. Okay. Now, again, if you're going to read the spreadsheet, you get all the CFTC risk disclosures down at the bottom. If you have not taken a free trial with us and you want to take a free trial with us, go to the home page. Go to the home page at CFRN.net. Right here where it says free 5-day trial, just click on that, and you'll be brought to this page right here, where all we ask for is your name, your email, your phone number. You can fill this in if you want to. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link, or we don't know that you took the free trial. Okay. Yeah. So let's get into what happened today. Now, we killed it on gold. We did have one stop out, but we had some really nice trades in gold today. And again, I missed a whole bunch of them. But let's see. Right over here is where we started out with gold. This was our first trade of the morning. Oh, yeah, that's right. Sorry. This right here on gold was our first trade of the morning. I'll go through everything else again at the end. But this was our first trade of the morning right here. We picked up 10 ticks on that. We could have gotten, way more. But first of all, I was having headset problems. Fortunately, you could hear me, but I can't hear anybody else. So there's a setting somewhere. I don't know what it is. Yeah, I just changed it back, guys. I have the charts now. Then things started whipping around and getting sideways, and this is all in the first 15 minutes. Okay, then we had a trade here, there, and there that I missed. And we had 10 ticks on the first trade, 15 ticks on the second trade to put us at plus 25. Then 20 ticks on the third trade to put us at plus 45. And looks like I missed a trade here and here. And we picked up 4 more ticks there to put us at plus 49. Right? No, plus 40. We picked up 2 ticks to put us at plus 47. Then we had a break even right there. And I really just wanted to get to 50, but then I stopped out here. And that put us back down to plus 39. I had a break even there. And then we get into the break. So we really had good trading today in gold. The euro, well, the euro gave us some opportunity. We only had a couple of trades in it. We had a break even right there, and a plus 10 right there. Now before that, it was pretty choppy in here. I don't know. It was just choppy in here before that. That's all in the pre-market. Then we picked up our 10 ticks. Looks like, well, this was during the break. There was a trade there and a trade here on the euro. Now, let's go back here on crude. Crude had a lot of opportunity today too, but we ended up right here. We had a break even, then we had a stop out. Then I was slowly working my way back out of that stop out. Here I picked up 2, put us at -6. This put us at -8. This put us at -6. That was a break even. And then this was plus 9 to put us at plus 3 on the morning session. Then we get into here, and it looks like right here there was a shorting opportunity. Then it got really choppy, and then we get into the break. So that was crude today. Now the ES, what do we do with the ES? We had 4 trades on the ES. There were way more than 4 trades available, but that's just what I got. I tried to fill on a bunch of things, but didn't get filled. I'll get into it here. We get back to the beginning. Excuse me. Yeah, here we go. Back to the very beginning. Let's see. Okay. Start out the morning session. There was a long trade right here. Then there was a short trade right here. Then another one right there. And another one right there. No, I didn't get any of those. I was trading gold at the time. There was a long trade here and a long trade here. And finally, there was a short trade here that we did get. And we picked up 20 ticks on that trade. There was another one here. We picked up 4 more. Then I stopped out. So it was -8. That put us down to +16. And there was one more somewhere where I got 1 tick. There's trade there. I'm just looking at the slingshot right now. See, there was a bunch of opportunity. There was some right here. Right here. Right there. Right there. Right here. Right there. And there. And there. And there. See, there was just a ton of opportunity today with the ES. I ended up with 17 ticks on it. There was a short there that I missed. All these ones you see that are circles, they're the ellipses. Those are trades that I tried to get filled on, but I didn't get filled. Or I just missed them altogether. There. Beautiful trade right here. And then we get into the break. So that was the morning session. Now this is kind of weird right now. I can't hear anything, but I can speak. So at least I get to get that stuff done. So let me go back here to what I started with. Not that. That. Okay, if you have not taken a free trial with us, go to the home page at CFRN.net. And right here it says free 5-day trial. Click on that. And that'll bring you to this page, EminiTrainingschool.com. On this page, if you scroll down, you'll see all we ask for is your name, your email, your phone number. You can fill this in if you want to, and then hit the send button. Once you hit the send button, you'll be sent a confirmation link. Okay, you must click on that confirmation link, but we don't know that you took the free trial. Now the spreadsheet, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 14th day of May, 2020. We made 10 on the euro, 3 on crude, 39 on gold, and 17 on the ES. That put us at +695 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 16 trades. Okay, so on the month now we're up $3,327. That's over 10 days, averaging $332 per contract per 2-hour day. And as you can see, I missed a lot of trades. On the year now, we're at $33,662. That's over 88 days, averaging $382 per contract per 2-hour day. Okay. Yeah, and with that, we can pass it back out. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. And I hope you're feeling better, Dwayne. I can't hear you, so you see, I'm trying to fix the problem right now. It's got to be a setting somewhere. But you can take the charts back now. Okay, and the recap of the recap, I can't hear Dwayne asking me for that, so I'm just gonna say it. Today it took 4 minutes and 1 trade to get to $100 a contract. Okay. All right, and with that, I'm gonna have to go buy a new headset. See if I can get this thing working. tomorrow. All right, guys. Thanks for coming this morning, and I'll be talking to you later. Okay.
All right, guys, I'm back, and I spoke with John. He is going to join us here shortly, and because Valerie wasn't sure if I was going to be able to come on and do the show today or not, she had sent a cancellation notice to Dr. Tom. So Valerie, I don't know if you reached him, if he's still planning to come on or not come on, but if he does, today's Thursday, Dr. Tom Day, so he normally shows up at the top of the hour. And John will probably show up in about the next 10 to 15 minutes. So in the meantime, now I didn't send any alerts out yesterday because I wasn't feeling well, and I hope that serves as an example to everyone. Anytime that you're too hungry, too angry, too lonely, or too tired, hungry, angry, lonely, tired, you should halt, H-A-L-T, all trading activity. And I guess we got to throw a S on the end and call it halts. You got to put the halts on your trading, because if your head's not in the game, you won't see things clearly, you won't think clearly, you won't make proper decisions, especially the one about angry. That's a really, really bad one. Whether you're angry at somebody else or angry at yourself because of the last trade you made that didn't work out, you won't make decisions that are logically based. You'll make emotionally based decisions, or hopefully based decisions, and that honestly never leads to good results. So although I wanted to, I didn't think I could do my best job. So, and today I'm here to do the best job that I can do. So, all right, I do have a recap of week 93 so far. We're in week 93, and Valerie, I just accidentally called your phone on Telegram. That was an accident. So I was reaching for one icon and accidentally hit the other. But here we are, week 93 so far. Logic 247. We've issued a total of 53 alerts, which is, there have been weeks that we only issued 50 alerts the entire week. And so Sunday, Monday, Tuesday, we issued 53 alerts. That was up through, I believe, Tuesday night. And then we didn't have any alerts yesterday, Wednesday, and I haven't put any out so far today. I do anticipate putting some out after the show. So, out of the 53, 5 never triggered. That left us with 48 actionable alerts. And so far, 2 of those stopped out. 4% of actionable alerts stopped out. That's a low number. What we've averaged over the last 93 weeks is 20%. So now let's take a look at the alerts from last night, and as time permits we'll look at the ones from the day before. Okay, so if you want to take a screenshot, you can do that. They were late getting out last night, but got them out. 11:30 p.m. Eastern. Now the time you see here, that's Pacific. I'm in Phoenix, and Arizona doesn't do daylight savings time, so 8 months out of the year we're actually on Pacific time. So everybody got a screenshot? Okay. On the S&P. And let's go to the 30-minute chart. And we'll take these out of the way for a moment. Okay, and let me find 11:30 last night. That would be 23:30. That would be that candle right there. during the life of that candle. Actually, the timestamp is 27, so it was actually the previous 30-minute candle. Okay, so consider being long 28.34. We can see we haven't reached that in today's session. And the flip side of that alert was to be short 27.96. And these are this week's weekly trading zones. So 27.96 right there. Okay. And out of sheer boredom yesterday, in the midst of not feeling so well, I was flipping through the TV for something to look at, and I saw that they had just added Crazy Rich Asians to the free movie list. So I clicked on it, and it's sort of a silly, goofy kind of a movie, but it's a feel-good movie. So if you need something to cheer you up, it's a boy meets girl. I won't go any further than that. Yeah, it's a, what do they call it, a rom-com, I guess, a romantic comedy. It's no great literary work. There'll be no Pulitzers or Nobel Prizes given out. But I think it did actually pretty good at the box office. I think the critics, I don't know what the critics thought, but it's what the audience thinks that matters. Yeah, it's fun to watch. Watch it with the family, watch it with the kids. It's safe. So from 27.96, we dropped to the weekly trading zone, and then we spiked the weekly trading zone. And this is the lowest weekly trading zone for the S&P for this week. Now the highest zone, the lowest zone, there's no indication when I publish the zones, which we do every Monday morning at 6:15 a.m. Eastern. We've been publishing them since December 14th of 2009. I'm not saying that price is going to go to the highest or go to the lowest. What I'm saying is that by the end of the week, we expect price to close on the playing field. You can look at the zones sort of like a football gridiron, and you're sitting at the 50-yard line, and as you go to the left, you got the 40, the 30, the 20, the end zone, and as you look to the right, the 40, the 30, the 20, the end zone, and the end zone would be that final weekly trading zone on the upside and the downside. So we dipped below the lowest, which happens. We even occasionally will close below the lowest or close above the highest, but it is pretty rare. What's more common is to see it slip out and then slip back in. And so today, being Thursday, we've still got basically 1.5 trading days left. The futures markets trade around the clock, so this thing will keep right on ticking through tonight and up until tomorrow afternoon at 5 p.m. Eastern. Last Friday, the final 30 minutes were a bit of a surprise, because the final 30 minutes, most days, the futures market closes at 4:15. Stocks close at 4 Eastern, futures close at 4:15, and then they reopen at 4:30 Eastern. And that final 30 minutes is usually pretty uneventful. Last Friday, if I'm recalling correctly, it was a different story. We had, I think, quite a bit of movement. So from 27.96 down to 85, that would be 11 points at $50 per point. That's $550 per contract traded. If, for whatever reason, you chose to stay with it, the swing low took us all the way down to 27.60 and a quarter. So that's about 36 S&P points, 35 and change, so we'll call it 35. Alexa, 35 times 50.
35 times 50 is 1,750.
So it was a $1,700 move. And what's important to understand, we're like the usher in the movie theaters of days gone by. You went to the movie had already started, there was an usher with a little funny hat on, and he would shine a flashlight and make sure you were able to get to your seat without falling or tripping over anyone. And that's really what our alerts do. They shine a light. The market does the heavy lifting. Now, important prices, important areas are almost always tested. So price did get back above the trigger. It did trigger again. And on the second time, instead of spiking through it, it came a little bit shy. And so that might be the first indication that there's some strength coming into the market. Because by the time this 30-minute candle closed, even though it was red, we had gone from a pretty decent sized red candle to a small body. And now you can see that we, on this move up, we did not take out this swing high. Not yet. And so we had a high, a lower high. That high was 28.10.75. This high is 28.10.50. So if we have a high, a lower high, and then an even lower high, just as this was a sign of potential strength, we could be seeing potential weakness here. So what's going to be key for the remainder of today's session is, can we take out that swing high? Think of that as a potential obstacle that buyers have to overcome. And then if they get through there, they've got another obstacle right overhead, and another obstacle to overcome. If they can get up into this area, then that becomes a sign that there's a possibility we trade right on up to the weekly trading zone overhead. And that's what prices do. They go from zone to zone, and then either on to the next zone. In this case, there was no other zone below, so now it's trying to get back to the zone overhead, but it's got to overcome all these obstacles in the process in order to do so. So let's go to the Dow. On the Dow, the alert on the short side was to be short 23045. And it looks like John just logged in, so let me open up his mic. So from 23045, you can see exactly what happened. John, I'm on my way to open up your mic. Hey, John, welcome to the show.
Hi there.
Sorry I missed you yesterday.
Were you on yesterday or not?
Michael came on and did his part. I wasn't feeling so good, so no, I didn't.
Yeah, I left a message for you because I was hoping it wasn't something worse. So glad you're back today.
Yeah. How are you feeling?
You know what? I wasn't feeling so great this morning, but I'm getting better as the day goes on. So it's pleased about that.
That's great.
The market, I don't believe that we're going to actually. Let me say this is a very critical day. You wouldn't be surprised that we finish the day up, actually, today.
It's trying to work its way higher. It's got some obstacles to overcome, but it's trying.
Right. We've cut the losses in half on the NASDAQ already, and we've got a kind of a head and shoulders bottom developing on an intraday basis. And actually, we've got the makings of a quite a good bottom. Right, I know I talk about these high quality bottoms. Mm-hmm. We're in the process of putting in a high quality bottom right now that if we go positive today, I think we're going to rally in the next few days. And there's reason for that, reasonably good reason for that to happen. First of all, the markets had a bit of a pullback for a few days, which has kind of refreshed it a bit. It was getting a little bit overdone on the upside. Second thing is the airlines and they're actually one of the strongest sectors today. I believe Spirit Air and UL and a few others are actually up on the day. And Boeing could be a contender. I'm looking at Boeing as a possible buy here. My little vaccine stock is VBIV. Well, both of them are doing very well today. INO looks like it'll probably go to a new interim high today, or close to it.
Which one is that? I'll bring up the chart.
INO.
Okay.
It's
That's a daily chart.
oh, no, there's something wrong. Oh, there it is. Okay.
Yeah,
Okay, there we go. You see, it's got quite a good pattern. And look, it's worth looking at this. If you could squeeze it up a bit, Dwayne, to get a bit more. Okay, you see the way the trend of this thing is sort of starting to go a little bit exponential. Now, just memorize this. First of all, we've got a phenomenal base on this stock, right? And remember what happened to TMRC back in December. In fact, it wouldn't be a bad idea to put TMRC up. But look at that base. I mean, look at the base. Look at the fact that a lot of these vaccine stocks had a meteoric rise initially, came back, sort of based out again, and then had a secondary rise, and some of them have had a third rise already.
No, on this one, John, the fact that this huge bearish engulfing candle was not able to take price below that base, that's definitely a sign of strength.
Sure. And now, just while we're on the vaccines, let's just look at mRNA.
Okay.
Now, mRNA looks, remember, it's about a month ahead of, month or 2 weeks or 2 months ahead of INO. And look at the similarities. So if you go back a couple of months, look at where we are on INO. We're at the equivalent of 30 on INO, in my view, just about ready to break out to the upside on INO. And take a look at, well, let's look at VBIV, because it's another vaccine stock. I don't really know anything about this other than it's a Canadian company, and therefore it may get some kind of a grant from the Canadian government, who knows, but it's certainly acting really well right now, this stock. That's VBIV. Are you there? Hello?
I can hear you, John. I just...
Yeah. Oh, great. Hi, Val.
Hi. Okay, guys, now I don't hear Dwayne or John.
Can you hear me now?
Now I can hear you again. Yes,
okay.
Awesome.
John,
Great.
I can hear you, but I just had something come up here on my end, so you just keep going. And Valerie, if you can work with John.
Can you put up VBIV? Yeah.
Okay, I'll be back as soon as I can.
You see the way that thing is just breaking out there. It's actually acting really, really well, this stock. So it's going to be interesting to see what sort of news comes out on this thing. That's pushing it, quite a bit higher. The stock's almost doubled in like 2 weeks off this most recent low, which is quite impressive. Because I think I mentioned it down there in the 110 area, somewhere like that. I think these vaccines stocks are going to keep going for a while, and I think INO, which we just looked at, is a contender to break out any day, possibly. It feels to me like we could go to about 25 on INO, maybe even higher. There's an article actually out there somewhere saying that they have a bit of an edge over mRNA. So you look at mRNA, it went from the 20s, basically went up about almost triple from the 25 range, 24, 25 range, which we mentioned on this show when it was down there. And then there's another company called NVAX, which is very similar to INO again. You know, it was sort of breaking out, and next thing you know, it jumps up about $15, and it looks like it's going higher as well. So it is kind of important. You know, I really wouldn't like the market to close down today any more than it is currently at. I think if it was to close down, it would be very bad. Okay, sorry about that. Yeah. So, the other thing is that gold. while we're waiting for Dwayne to come back on, gold is actually. It looks to me like it's starting. I wouldn't call it a runaway move to the upside, although it could become one. But it's the big. I think we're making the building blocks. We're putting in the building blocks right now in the metals for a potential runaway move. That could, you know, in other words, we're at 1740 right now. We could get up to 17.5 towards 18. Might have a bit of trouble getting through 18 since we got rejected there the first time around. But we could consolidate a bit around 1800. But I think after that, you're going to see a fairly rapid move, probably up to at least 1900. I'm pretty sure. Maybe 1950, and maybe all the way to 2200. And it could actually happen quite quickly. You know, look, you've got yesterday Trump was talking about giving the Western states, like 7 states, $1 trillion bailout, including California, Colorado, and Nevada, and a few others. Then there's this $3 trillion deal that Pelosi's trying to put together. Some sort of a form of that will probably happen. So, and then you've got the eastern states and New York to get bailed out. So, you know, you're talking about another $5 trillion, probably before it's all up. And that just has to move the needle higher on gold. I think upwards of 21. Now, a week from now, it might just be possible that we get a reduction in the unemployed, hopefully by a couple of million people, maybe more. I think the market's going to have a hard time going down on that news, actually. I think it's so. I think today's, even though we've stumbled a bit today, and we're not getting the best. You know, this is probably the worst day, the worst Thursday we've had in about 5 weeks since all this started. It's still not a bad day, and it looks, and actually now, I mean, it really does look like we're going to go positive today now on everything. The Dow is gradually going; it's already positive. I don't personally like it when the Dow leads us higher. It's a kind of a sign of weakness. But I should point out that the last time, look, most of the airline stocks today are making double bottoms. And the last time we had a rally off this bottom, by the way, Trump is saying something right now, getting on his helicopter, and the market's going up pretty quickly as a result. So he must be saying something good. So we're cutting our losses as we speak. And the Dow's now up. Geez, it just jumped from 30 to 74, just like that. So Boeing is picking up just like I thought, and it kind of looks. I think we're gonna have a late rally in all these airline related stocks today. And what I was going to say, and JP Morgan, after being in a big slump here for a number of days, it's actually performing very strongly today. So what I wanted to point out is the last time we had this bottom like this, it was actually the Dow stocks and the airlines that led the way higher. So it feels sort of the same way today. And Apple, Amazon is actually acting really, really well. Well, not really well, but it's coming off the lows. Dow, what else? AMD is acting quite well, which is good because the semiconductors were beat up quite a bit, and it seems to be both. In particular, AMD is actually been acting really, really well. So the fact that that's moving higher is a good thing. Also, the energy, the crude, is actually pulling up. Somebody, BP, put in a double bottom today. I'm not a big fan of the oil sector, but it actually could be. Yeah, boy, BP's acting great today. It put in a low at the open, 21.30. It's up $1 already, so that's quite impressive.
Yeah, the crude's up at $1.80 at this point.
Yeah, look at BP. It's put in a kind of a perfect bottom there, double bottom at 21, just above 21. So I mean, if that holds, could mean pretty substantial rally, maybe up to 30 from here. So that's actually quite potentially quite constructive. And look, the airlines, wow, the Dow's up 124 now, so are good at positive. We're only 15 points from going going positive on the Nasdaq now. So that's very impressive. And look, Boeing just jumped $1 as we speak, so that's great. I'm virtually certain we're going to go positive today now with this action. So I think it's certainly going to avert. It would have been very bad if we had a down Thursday and Friday. So I think the fact that we're only pulling back mildly here is really very, very constructive. And another thing, the Fed chairman came out yesterday, and it's very rare for the it's very rare for the Fed guy to come out and the market not rally. Yeah, it's rare for the market not to rally a day after the Fed guy talks. Because I don't think he came out to put the market down, even though it went down a bit. I think his general message was they're still going to do whatever it takes, and Trump called him the most improved player yesterday, so he's definitely pretty pleased with.
That was pretty funny.
Yeah.
You need to get that, John?
No, it's okay. So,
is there a different chart you want me to put up?
Could you put up NVAX?
Okay.
NVAX.
We want to look at Boeing too, real quick.
Yeah, great. And NVAX. So this is, I mean, look at the I kind of got a feeling that something like this is going to happen with INO. Where you just get a big gap and huge gap. I mean, again, look at the base on the Novavax and how it broke out, and then it really went substantially higher. So and then let's have a look at Boeing. Yeah, why not? Yeah.
Boeing, okay.
BA. Yeah. This is probably a pretty good place for Boeing to bottom. It's right there at the previous gap, right? And, this thing could really power higher from here. Why don't you take a look at SAVE, that's Spirit Airlines.
What's the symbol again? What's the symbol again, John? John, I lost your audio. John. All right. Well, let's finish the recap. I don't know what happened with John. And I've got a situation here, guys, on top of being not feeling well. Let's just get through these. Here's the Russell. We've done the S&P. Okay, the S&P is getting up to that area that we outlined as potential resistance. And as you recall, I said if we can get through that, we got this one more obstacle. And while it's not exactly a clear playing field up here, it shows just getting above this area shows great strength in the market and its ability to get to the zone overhead becomes, if we clear this obstacle, getting to the zone overhead becomes a definite possibility. Okay, on the Dow, the alert was 230. Let me pull it back up. 23045. There we go, 23045. We made it down to the zone at 22955. So I'll call that about 55 points, $5 a point, $250 per contract traded, and of course we spiked below it. The Russell, the alert was to sell 1216. We didn't quite touch it here. Swing low was 1217. We did trigger it here, took us to the zone. That is the lowest weekly zone. We spiked below it all the way down to 1175. We got up, we triggered again, and on this second trigger, sign of strength is that we weren't able to go back to the zone. Was that you, John? John, is that you?
It's Tom.
Oh, hey, Dr. Tom, how are you?
I'm fine. How are you, sir?
Well, I've been better, but glad to have you with us. Are you going to use the charts today?
I will tell you in 1 second, all right? Sarah was working. I've got everything in a Word document I want to talk about, but she was working on getting the PowerPoint ready.
Okay.
Yep, looks good. Let's go ahead and shoot it over.
Okay.
Are you not feeling well?
Well, yeah, I was under the weather yesterday, and then I've got a little familial crisis going on. So I'm going to turn it over to you. Here come the charts.
Okay.
And the mic. And while I tend to this issue I've got here on the home front, you and Valerie can chat, and I'll watch the video. I'll pop back in a few minutes. I just got to go check on a couple things.
Okay. Well,
So
I'm praying for you.
We see all the screens. You just need to go to, there you go, Financial Education Series.
There we go.
Depression is a depression in our future. The first time I've ever agreed with Nancy Pelosi. I was surprised to see her on Kramer the other day. She wasn't on very long, about 5 minutes, but yeah, I was very surprised to see that. All right, sir, I'm going to turn it over to you right now.
All right, thanks.
Okay.
Bless you.
Thank you.
Hello, folks. This is Dr. Tom Barrett. How's everybody doing?
Well, I have to admit I'm curious. I've never agreed with Nancy Pelosi, so maybe At the end of today, it will be my first time as well.
Okay. Well, see what you think. And you can let me know if anybody has any questions or comments as we go, okay?
Okay, I'll do that.
Good to talk to you, Valerie. God
You
bless
too.
you. And Lord bless everybody that's online. So Nancy Pelosi said, with so many people unemployed, we could have a depression. And at first, I really didn't like that. Mostly just because I can't stand her. So she said the sun was shining. I'd probably disagree with her. But anyway, I've been thinking about this a lot long before she said that. And all the experts agree that we are in the worst recession, not depression, that has ever happened since the Great Depression. Okay, that's not up for debate. Now, technically, you don't know you're in a recession until so many quarters of negative growth happens and so on. In case someone doesn't understand what I'm talking about when I talk about growth, we're talking about GDP, or gross domestic product growth. Mr. Obama told us after, we've had 4 and 5% growth, positive growth in the past, but he said we'll never have more than 2% again. It's because he didn't know how to manage an economy. So under him, we would never have had more than 2%. But as soon as Trump was elected, things turned around. We started seeing 3.5%, 4% growth. Obviously, that is not going to be the case. And at the end here, I'll tell you what the expectations are for this quarter, and the main argument for the fact that we could actually be in a recession right now. Okay. Here's a title from one of the articles I'm referencing here. An unemployment rate of 23%. The real jobless picture is coming together. The economists will tell you whatever the government says the unemployment rate is, multiply it by 2.1. All right. And the reason for that is that people get unemployment benefits usually for a year to 2 years, depending on what Congress is feeling like. So once you go off of unemployment and you're no longer getting the benefits, they don't consider you unemployed anymore. How dumb is that? I mean, not only you're still unemployed, but now you're not getting the unemployment, so-called insurance, they call it. It's not really, it's a sort of a Ponzi scheme, much like Social Security. It's not insurance in the sense that you're getting money that you paid into it. That money's long gone. You're getting money from the people who are currently paying into it. So as the unemployment goes up, we can see unemployment compensation disappear. That's also a real possibility. But anyway, there's different estimates on it, but long story short, JP Morgan says that we're gonna, in this quarter, hit 20% unemployment and 40% a hit to second quarter GDP. That is about in line with what most people are saying, 38 to 39%. But the real unemployment rate, like I said, is much worse. If you're interested in statistics and understanding what's happening in the economy, check out shadowstats.com. The site is run by an independent economist. If you ever want the truth about the economy, you do not talk to a government economist, because their job is to make everybody feel good. And you don't talk to a university economist. Apologies to any university economists who might be on the show today, but frankly, almost all the economists in the university, their research is funded by government grants. So you're not going to get a straight picture from them. So you need to go to independent economists. Now, the worst crash that ever happened in U.S. history was the stock market crash of 29, up until now, that is. And the collapse of prices started in October 29, and by the end of the month, the Dow had dropped 24.8%, the worst decline up to that point in U.S. history. Of course, the recent decline was even worse. Problems it caused was overconfidence in the stock market. A lot of investments during they call the roaring 20s, created an unsustainable bubble. And very much like this 12-year bull market that we've had is a bubble. Everybody knows you can only pump up a bubble so far until it bursts. So overnight, millions of people lost their businesses, their life savings, and that was really the beginning of the Great Depression. A big part of the problem, by the way, was the overuse of leverage. I always tell people, based on history, be very, very careful with leverage, because what could be a normal correction in the stock market could end up being a disaster for you. The current stock market, how it compares to other crashes in history. Well, the stock market crash that we've had was about a 35% crash. All right. That's much worse than the 29% roughly from the Depression. Our unemployment rate, the real rate, which is about 30%, is much worse than the 24.8% during the Great Depression. But the real kicker is GDP growth or negative growth. Everybody agrees that we're going to see at least, even the White House, I think they just wanted to kind of forewarn people so they wouldn't get a huge shock at the end of this quarter. Like the quarter ends in June, so mid-July when the numbers come out, they say it's going to be over 30%. Most people believe it's going to be 38 to 39%, and you saw that JP Morgan believes it's going to be 40%. So everybody's right in that range. So I think that's pretty accurate. Never in the history of the world has there been, at least in the history of the United States, I should say, has there been anything that even comes close to that, even during the Depression. Because business kept going. There were a lot of businesses that failed, and there are a lot of individuals that lost all their money in the stock market. So there's no question it was a terrible time. I mean, it was so bad that people were jumping off of buildings and killing themselves because it was the only way they could provide for their families. They lost all their money in the stock market. They lost their jobs. And so at least their families could have the insurance. Could you take back the slides, Valerie? Because my PowerPoint seems to be stuck here. And I'll just work off of my Word document from here. Just to make, let it be personal, okay? There we go. I found this quote from a gentleman that suffered through the Great Depression, and it's pretty amazing. Let me get over to that. Excuse me, I wasn't expecting to be using this, but okay, here it is. This gentleman, his name was George Mahales, He was an inexperienced investor, like most of the people at that time, and frankly, most of the people who are investing in the stock market now have only gotten in the last few years because, you know, they've avoided it. They've lost money in the past, or their parents have lost their whole life savings in the stock market, so they've never been in. But then seen it go up and up and up and up and up. Eventually, they just sort of capitulate and get involved. So there's an old saying that, you know, when the kid that parks your car at the restaurant is giving you stock tips, that's the time to get out, you know, when everybody's in the market. So he was an inexperienced investor like so many people today. And he owned a small diner in Spartanburg, South Carolina. He was a Greek immigrant. And he started investing just before the crash. One day, he said, one of my customers showed me how much money he was making in the market. It looked good to me, and I bit with what folks call hook, line, and sinker. The first day of October 1929 made me feel like I was rich. During the last days of October, my stocks began to drop. I was gambling on the margin. Again, a very dangerous thing to do. My brother called me and told me I would have to put up more cash. I went to the bank and put up all the cash I had in the bank with my brother. I had about $5,000. On that day, the very same day that he put the $5,000 in, October 29th, they told me I needed more cash. I couldn't get it. I was wiped out. So he lost his restaurant. He lost his home. And he says, I was wiped out. I considered killing myself because I had nothing left. So that comes from the article, The Stock Market Crash in 1929, Facts, Causes, and Impact. Very, very interesting. Not just because it's history, but because history has a nasty habit of repeating itself. So the crash in 29 was the worst event in the history of the Dow. October 29th, that he mentioned there, was called Black Tuesday. Investors lost billions of dollars on the New York Stock Exchange. Today, with inflation and money worth so much less, that would be trillions of dollars. And that was the second day in a row that the Dow had dropped by 12%. Then it got even worse. Over the period of about 2 months, starting mid-September, the Dow dropped a total, just a really staggering amount, 46.6% of its value. The historic crash was precipitated by wild speculation and reckless investing. When unemployment, listen to this, when unemployment began to climb and production fell at the end of the decade, stocks were trading at prices well in excess of their true value. Well, folks, at the end of last year, before unemployment started rising, we had great unemployment rates at like 3.5% in some periods. 3.5% is really full employment because only about half of Americans are employable. And so 3.5% is when businesses start having trouble finding employees. So we weren't having any problem with unemployment, and we certainly weren't having any problem with production. GDP was growing, like I said, 3.5%, 4%. So now suddenly the government turns off the economy. The Secretary of the Treasury, Steve Mnuchin, said, you know, this is the only time that I know of in the history of the world that a government turned off the economy, but we had to do it to keep the country safe. Well, a lot of people, including a lot of scientists, epidemiologists, very, very smart people, say that it wasn't necessary to turn off the economy, that there's other ways it could have been done. I live in Florida, and our governor here resisted, you know, doing the house arrest thing. And then he was more or less forced into it by the Democrats. But he had the least draconian policies of any state. There's some states where they're arresting people for going to church in cars, like they have drive-in church, and the cars line up in rows and the pastor speaks through an FM radio. He could do the same thing with them at home, but people just feel the need to be together. But they're definitely social distancing. I mean, cars are much in the space you need to have between them is much more than 6 feet. But at least they could see their neighbors and wave at them and stuff. And he would broadcast on an FM transmitter, and they would listen on the radio in the car. Police came around and took down everybody's license plates and fined them $500 and told them they had to leave right in the middle of the sermon or be arrested. That's draconian. There was a gentleman paddling a canoe down the middle of a river. No danger to himself, no danger to anybody else. And they sent a police boat and a helicopter after him. Now, I used to be a paramedic on the sheriff's helicopter here in Palm Beach County, and I know back then it cost about $2,000 an hour to run that helicopter. They're very, very expensive to run because they have to be completely torn down every few months and rebuilt from the frame up. So we had to have 2 helicopters to have one in operation. Totally senseless. A mother arrested and handcuffed in front of her little children because she dared to take them through a park when everybody knows it's healthier to be outside. There was nobody else in the park. The sunlight kills the virus on impact. I could go on, but the point is that we've handled it poorly. Contrast Governor Cuomo in New York, who ordered nursing homes to take China virus infected patients from hospitals. And as a result, 30% of all the deaths that happened in New York were in nursing homes. He had nursing homes with perfectly healthy people. He forced them, threatened them with arrest if they didn't take patients who were sick. And of course, it spread like wildfire throughout the nursing homes. Governor DeSantis here in Florida did exactly the opposite. He locked down the nursing homes. He said, no hospital can transfer any patient that has the virus, even if they're not symptomatic. If they test positive, you're not allowed to transfer them out of the hospital. You keep them there where you can manage it. They keep them in a separate area, separate wing in most hospitals, and there's very little dangerous spread within the hospital. So New York is a perfect example of how not to handle the virus, and Florida is and I'm not just saying that because I live here and that I like Governor DeSantis because he's a Christian and Cuomo's an idiot. It's just the fact that New York is the poster child for how not to handle it, and Florida is the poster child for how it should be handled. Cuomo wouldn't let people mow their lawns. Well, that's outside and it's healthy. Some states were not allowing garden stores to open. People were wanting to, they're stuck at home, so they wanted to plant a vegetable garden in case there's a shortage of food. They didn't allow anybody to plant a garden. Whereas here in Florida, people were doing all types of outdoor things, and many people planted vegetable gardens and are eating fresh vegetables today. Again, I could go on, but the fact is that the difference between the two states is this: a high percentage of New Yorkers have been infected and died, and we're probably in Florida the least percentage. You say, well, their population is more concentrated. Well, I live in Palm Beach County, and in the 3 counties that make up what's called the Gold Coast, Palm Beach, Broward, and Dade, we have half the population of the entire state. The other 63 counties have the other half. So that's very, very concentrated population because we have the Gulf Stream here. I mean, you can literally go swimming on Christmas Day because the Gulf Stream keeps the water warm. and that's why people move here. So we're just as concentrated as New York, and yet they have 10, 12 times as many infections and deaths because Governor DeSantis trusted the people to use good sense. If you had a business, if you wanted customers, you would disinfect everything. You would make sure that, not too many people were in the same space. You would do the social distancing thing and so on. And if you didn't, people would go to some other business. So he trusted the people. Cuomo is one of those people that thinks that only the government knows anything. The government is the all-wise, the all-knowing, and the only one that can make any decisions about your life. So as a result, they've suffered more than any other state. The other problem is New York is a sanctuary state. A lot of the people that spread the virus in New York were illegal aliens that ICE would have taken away long ago and sent them back to their countries. But instead, Cuomo ordered the police not to cooperate with ICE. So that not only put the illegal immigrants at more risk, because instead of ICE picking them up to jail, they had to go and do a raid and catch them at their home or place of business, or whatever. And so there's more chance of somebody getting shot, and it put the ICE agents at more risk. But he's an ideologue. He doesn't care about facts. He cares about truth. I mean, Joe Biden actually said that, but that's sort of the mantra of these kind of people. Facts don't matter to them. What they call their truth, whatever they believe, is more important than facts. So bottom line, we could have done this in a much smarter way and put far less people at risk. I want to invite you to go to conservativetruth.org and read an article I have there called "The Operation Was Successful, but the Patient Died." That's an old joke, but it actually happens. Sometimes in complicated heart surgeries, for instance, the procedure goes flawlessly, but the patient was so weakened that he couldn't handle the strain of the surgery and the anesthesia, and they die anyway. But in this case, if they're saying that putting people under house arrest all over the country, at one point, 300 million Americans were being ordered to stay at home, then the virus slowed in some places, other places it didn't. But if they call that success, what about all the people who died because of house arrest? Since this happened, domestic violence has gone up because the abusers, instead of being at work, are sitting home drinking beer, getting drunk, and then they abuse their children and beat their wives. And in many cases, they murder their whole family. That's happened since this started. Depression is through the roof. All the hotlines for suicide, they can't take all the calls. The actual number of suicides has increased dramatically. Some people are actually starving because they can't work and they didn't qualify for the government handouts. Older people that live alone are dying, and their bodies are being found a week or 2 weeks later because the smell that would come out of the house, because the neighbors were afraid to go and check on them and see if they're okay. Again, read the article. It's got all the facts and figures. We may well find, when all this is over, that more people have died because of the house arrest that have died of the virus, because more and more epidemiologists are coming around to understand the truth that the coronavirus deaths will probably be less than the flu virus deaths. They're not reporting the numbers. The CDC is not reporting the numbers of regular influenza, but we're having a huge surge in that. The worst year was 69,000 people, but we may see more than that die of the flu. So when you compare that to the corona deaths, and then you include the fact that they're faking the numbers. I saw the chief health officer, I think it was Maryland, a black lady on TV, and she said that they're counting people who die in hospice as China virus deaths. If they were there in hospice, it's because they only usually have a few days or at the most 2 weeks to live, or they don't take them in hospice. And
exactly, they're making it beneficial to add COVID to the death certificate. They put a monetary amount on it.
oh goodness, I didn't know that. But she admitted that if there's any hint of coronavirus, and we all know that the tests are very inaccurate, a lot of false negatives and false positives. You could test positive for it one day, and then 2 days later, test negative. But it's a very sensitive test. So they're doing two things. They're taking these hospice deaths where people were already dying of something else, and that's the real cause of death. And if they have any hint of the virus, which frankly, most of us probably have some of those cells circulating in our bodies. We all have cancer cells circulating in our bloodstream. Don't believe me? Look it up. It's our immune system that keeps us from succumbing to these various different things. And that's why so many people that have had the virus have not even felt any symptoms. And then in a couple of weeks, they're clear. But they're also doing something else that just to me is pure evil. They're doing, in morgues, they're doing virus testing on corpses. Somebody dies in a car accident and they test it. Why? I mean, the only one reason why you would do something like that is to try and pump the numbers up. If somebody dies of a heart attack, or somebody dies that's had cancer for 2 years, was stage 4, and they knew he was dying. Remember, the test is very sensitive. So if they test their blood after they die of something entirely unrelated, and there's any little hint of the virus, then they put it down as a virus test. So we may find that the real numbers are far, far less. One epidemiologist said, we're probably going to see at the end of all this that at least in the United States, less than 0.1% of the virus results in death, and less than 5% even results in a serious illness that might possibly result in death. And yet they've had everybody so scared. Bill Mayer calls it panic porn. He believes that the media and the governors are deliberately trying to scare the heck out of people.
Bill Maher said that?
Yes, amazed me. I mean, he's I call it so-called comedian, because anybody that can only get laughs by using filthy talk, I don't really call him a comedian. But sometimes he makes sense. He was making a political statement, and it's not because he supports Trump, okay?
Yeah,
He starts off by saying, you Democrats, and he's one himself, but you Democrats and you people in the media are going about this all wrong. If you continue pushing this panic porn, you're going to see Democrats voting for Trump because people don't like somebody who scares them to death. Except little kids, they like to be scared, But real people, we don't like it. And so they've overblown it so much that people were so afraid that if they got it, they were almost certainly going to die. Well, look, folks, we've had pandemics much worse than this. I mean, I could go down the list, but just search for pandemics in the United States. We've had pandemics worse than this in the United States and around the world, and never, ever did we shut businesses down. Not once. Now, some businesses shut down themselves, if they were afraid or whatever, but that's up to the people. Never have we suspended the Constitution because of a pandemic.
Nor have we quarantined the healthy.
Yes. There's another one. Okay, thank you. 90% of the people who die are elderly people, and I'm talking, seriously elderly. 70, 80 years old, 90 years old, and so on. And almost all of them had a prior morbid condition, like diabetes, pulmonary disease, heart disease, and so on. So they don't want us to know that it's almost all old people. By the way, the regular influenza is dangerous to babies and toddlers as well as to elderly people. But everybody in between, they get the flu and they do fine. But babies and elderly people die of the regular flu. And this is just another strain. The influenza A and influenza B, the two that keep coming back every year, they're both coronaviruses. Did you know that?
I did not.
Yes,
the common cold, 4 different strains of the common cold are all coronaviruses. So corona is not unknown. But when the president started calling it what it was, the Chinese virus, everybody totally freaked out. And the World Health Organization, which has been covering for China's lies, put out a statement that no one should name a disease something that will hurt somebody's feelings, and it's racist. Well, first of all, the Chinese are not a race, so there's nothing racist about them. The Koreans, the Japanese, and the Chinese all come from the same genetic pool. So there's nothing racist about calling it Chinese virus. They didn't call it racist when Obama referred to MERS as the Middle East Respiratory Syndrome. Was he being racist against Arabs? No, he was calling it what it was. But they're so afraid that the blame will go where it belongs with China that they're just totally scared to death that Trump's going to get reelected. So, again, we won't know this for sure for a long time because China's refused to allow anybody to come in from the outside and examine what happened, how it happened, and so on. But there is a very good chance that if China had done what they should have done, what they did with the Wuhan area, which is totally isolating it, if they had just closed their borders and shut it down, it would have been a China-only event. But in December, there were more Chinese flying to the United States than in any other month in the last 5 years. I don't think that's a coincidence. All right. China wanted it spread, and they particularly wanted America. Call me a conspiracy theorist if you want to. Throw eggs at me. I don't care. Look at the facts. It was created in a Chinese biowarfare laboratory. It emanated from there. And if they had just said, hey, we had an accident, somebody screwed up, the virus got out of the laboratory and fessed up right away, the situation would have been entirely different. And yet they knew, and the World Health Organization knew, because Taiwan reported it to the World Health Organization. The World Health Organization ignored them because China says Taiwan belongs to them. Taiwan says, no, we're an independent democratic country. But since China doesn't recognize them, the World Health Organization ignored the warning, and they covered for China. All right. So I don't know whether they deliberately released it. If so, it was an act of war. If they just released it accidentally, but covered up the fact for 2 months. And also, they lied. They said we've done extensive testing and there's no human-to-human transmission. It only comes from wild animals to humans. Well, over there, they have wild animal markets. They call it wet markets, and they kill the animal in front of you, and you get to see it bleed out and thrash around. And I don't know, the Chinese are very weird people. And so they blamed it on these wet markets. Well, here, very few Americans have any contact with wild animals unless you're a hunter. So again, if we had known that it's transmissible between humans, we would have done what Trump did in January much earlier. If we'd known that back in November when they knew about it, we would have shut off all travel incoming from China or all travel going to China. He did it in January once the truth became known. But all of this suffering, all of these deaths has come because the Chinese communists are evil, evil people. I'm not saying all Chinese are evil, but I'm sure most of the people in China would much rather not have a communist government that oppresses them. But the fact is that the government is about as evil as any government that's ever existed, even worse than the communist Russian government. Sorry, did you have something for Valerie?
No, I think that may have been Dwayne coming back on.
Oh, I thought I heard somebody. Did you have something you want to say, Dwayne?
No.
Because I can talk forever. You know that,
I was
right?
agreeing with you. No, and I was just encouraging Valerie to stay with you on the conversation because she sounds great.
Okay. Well, let me just kind of summarize this as far as the idea of us being in a depression, right? The two major metrics of the Great Depression were the stock market crash that caused or initiated the Great Depression, which was 29%. We had a stock market crash of 35%, far in excess. And I have people call me up practically every day that have stupidly stayed in the stock market because it dropped 35%. And then we had that dead cat bounce up to about 25,000. So they said, oh, well, everything's fine. And they're asking me, when are we going back to 30,000? And my standard answer is, we're going to go to 15,000 long before we go to 30,000. Well, that's what happened in the Depression. They started with a 29% drop and ended up with a 44.6% drop. Okay, so almost half. So I believe that's going to happen here. We've had this reprieve where people that were in the stock market that should have been watching carefully, because you never have a 12-year bull market without a crash. It's got to happen, at least a correction. But people stayed in because they're greedy and frankly not very smart, because it was coming. There were the values of the stock market did not support the stock market prices, and wealthy people, I know this because I sell gold, for the last year and a half, very wealthy people, millionaires, and I even have a few billionaire clients, have been buying huge amounts of gold from me. Well, I'm nosy, I ask them, where's this money coming from? Because I know that smart people don't leave money in the bank making 1% when inflation's, 4 to 5%, and they're losing money in the bank. Smart people, wealthy people, they keep their money invested. They'll have a little bit of cash around, but mostly it's invested. So the vast majority of the money was coming out of the stock market. But they were doing a little at a time because they didn't want to be the cause of a crash in the market before they had a chance to get their money out. Anybody who still believes in the stock market, look at what Warren Buffett is doing. Warren Buffett has sold all of his airline stocks. He doesn't believe in a V-shaped recovery. He doesn't believe we're going to come roaring back. And I don't think anybody that really knows the markets believes that. It's not going to be a V-shaped recovery. It's going to be a U, and the bottom of that U is going to be a very long, at least 1 year, maybe 2 years. We're going to have as many as 50% of the people in the country unemployed before this is over. And that's 50% of the employable people. Okay, 50% don't work. They're either retired, too young, too old, on Social Security or whatever. But of the roughly 50% that are employable, half of them will be unemployed before this is over. Millions of businesses will be closed. Folks, please, I'm not a doom and gloom guy, but I'm a facts guy. I'm very optimistic. People that know me well know that I always look for the silver lining. It's just I can't find one in all this. The only silver lining is that all the state governments haven't been as stupid as the Democrat-led states, who have been basically treating their citizens like small children that can't think for themselves. So the stock market drop, bigger now than the one that started the Depression. The ultimate loss in the stock market, 44.6% in the Depression, that extrapolates to about 50% today if things are similar. I realize different times, different markets, but and they had more margin back then. The unemployment rate, you don't ever go to the government for statistics, a government economist, because they're paid to lie. For instance, inflation, you'll never see the correct inflation rate coming from the government, because if they told you the real rate, then they'd have to pay people on Social Security the COLA increases and the federal retirees. So they've jerry-rigged the I don't know where my mind just went blank. It's just a few letters, but the way that they measure inflation, and they took out energy and food. If those were in there, oh, come on, help me out. Anyway,
I don't know. It's unadjusted or adjusted inflation rate.
Yeah, but it's not. It is the inflation rate, but that's what we call it. It's a few letters, but it doesn't matter. I'm just having a brain freeze here. It's an important number that people work off of to decide how much they're going to charge on leases, all kinds of things. And so they took out energy and food. Well, I don't know about you guys, but energy and food are a big part of my cost of living. That's it. The cost of living index. They took them out, and their excuse was that they're very volatile. Well, have these guys never heard of a moving average? You can apply that and still properly report. Also, they never report the effect of taxes. People who work, I'm not talking about all the people in the country, but the 50% of the people that work, a big part of their costs every year are taxes. That's never been calculated. So they always understate it. Unemployment, if you want to know the real unemployment rate, the economists tell us multiply whatever the government says by 2.1, and you've got the real number. So you don't go to government economists, you don't go to university economists, because their research is paid for in the main by grants from the government. So you go to an independent economist, and my favorite is shadowstats.com. Shadow, and then the first few letters of statistics, stats, STATS.com. There you get the real scoop. You can find out what the real inflation rate is, the real unemployment rate, and so on. So the trigger, the stock market crash that caused the Great Depression, we've had a bigger trigger. The unemployment rate today is about 5% higher than the unemployment rate when the Depression started. So then we look at the final number, and that's that GDP growth, which usually is growing. We very seldom have negative growth, but we're going to be looking at 38 to 39% negative growth. Never happened in history. So you put those three numbers together, and I believe that we could very well find that we are in and have been in a depression for at least a month. In just the last week, 2.93 million more people were unemployed, reported unemployed. So that's almost 1% of the U.S. entire population, or 2% of the employed population. If they allow this thing to go on for 6 months, that's going to mean 50% of all the people that used to be employed before this happened will be unemployed, caused by the government. You can't blame it on the virus. Okay, that's what they're doing. But if you're thinking about it in a clear-headed way, and you realize that we could have done this in a much smarter, a much more humane way, then you realize that it's the government. I'm not anti-government. I'm not in a militia or anything like that, but I am definitely anti-stupid government, and we've got a lot of that going on. So I was on another radio show where the guy knew even more about this than I did, and he said, absolutely, definitely, we are in a depression. This is all he does is study this stuff. He said, what would you recommend, Dr. Tom? And I said, well, the same thing I recommend everywhere. Get gold, particularly if you're unemployed. If you've got any assets, get gold, because that'll be the one thing that'll save you if we have a complete crash. The government's not going to save you. They're not going to be able to, because other countries are not going to borrow any more money. I think everybody realizes that all the money we print has to have debt behind it. We used to have gold that backed it. Now we have to sell treasuries to get the money to print. Well, Americans have long ago stopped buying treasuries. We used to buy almost all the treasuries. Now the majority are bought by foreign governments, and they're going through the same stuff that we're going through now. Do you think they're going to continue buying our treasuries and put themselves at risk of having worthless paper? I don't think so. So they're, people say, well, the government can keep on printing money forever. It cannot. There's a limit. Or no one will trust anything for the U.S. government, any contract, any treaty, and certainly no money. So prepare yourself, folks. If you're still employed, be frugal with your money. Don't go out and buy things you don't need, and definitely go to CFRN Gold and get the Gold Education Starter Package, and learn how you can protect what assets you have left using gold. By the way, today I'm not talking about the fact that we're definitely in the greatest recession we've ever been in, and we're probably in a depression, because I want you to buy gold. Frankly, I'm almost out of gold. Most of the gold dealers in the country are out of gold. The demand for gold has gone up 600% since this whole thing started. So if you don't buy gold from me, somebody else will. I'm not doing this as an advertisement. I'm telling you this because it's true, it's happening, and it is going to affect everybody in the country. So at least you can't ever say that you weren't warned. All right. I am not rejoicing in this. I'm praying every day for the deaths to stop, for the virus to be gone, and for our nation to be healed. But we are where we are, and the Bible says that a wise man plans for calamity. So a little late to plan for this one because we're in the middle of it, but it's probably going to get worse before it gets better. So I'll be praying for all of you. God bless you, and stay safe. Make sure you take your coronavirus vaccine every day. Psalms 91, read it out loud. Because if you are dwelling in the secret place of the Most High, if you're abiding under the shadow of the Almighty, in other words, if you are trusting in God, then Psalms 91 says, no plague shall come near your dwelling. And remember, God can't lie. So if he says it, it's the truth. I've heard people say, well, God says it, I believe it, and that settles it. No. If God says it, that settles it. Doesn't matter whether I believe it or not.
Amen.
God's word is true. So,
Amen.
Back to you, Dwayne.
Hey, Dr. Tom, thanks a lot for coming and sharing with us today. Appreciate you very much, and look forward to talking with you next week.
Okay. God bless you all.
All right.
Bye-bye.
Bye-bye. Okay. And Valerie, thank you very much for stepping in there. You sound really good. You need to be part of these conversations more often. So.
Okay. Well, I'm open to that. I just don't know what I have to offer. I learned so much.
Well, you learn, but you have much to give as well. Your point of view and everything, it's valuable. We appreciate you. Thank you. Thank you very much. Guys, you can see my chart that's up. The S&P, we had the Concierge Trade Alert last night. I'm going to drag those back up to the screen as I did earlier. And if anyone was unable to grab a screenshot earlier, here you go. Yes, we already talked about the short side. It made an 11-point move that turned into a 35-point move. And then it gave another about a 10-point move to the downside. And then the long side was 28.34. And the swing high so far is 28.33. Now again, I know that seems like voodoo or witchcraft or something, but I promise you it's not. It's spending a lot of time in front of the screens and understanding the whole thing I talked about earlier, just learning to identify areas of support and resistance, and understanding that, you know, if support gives way, well, then you got a down move on your hands, and if resistance gives way, well, you got a long move on your hands. So our alert was to go long at 28.34. The market made it up to 28.33, ground to a halt, and is now headed in the other direction. Where might we expect to find support? Well, it's a little thing we call the BBC, which is currently down at 28.04. Now, does that mean price will come all the way to 28.04? No. First, this area that we identified as potential resistance, which we made our way through, now that same area has the potential to be support. If price trades through that support, then the next area we had identified as potential resistance, that could become support. So if price trades through this area and this area, then it will run into the BBC, where we expect it to hold. Why do we expect it to hold? Because it holds more often than it doesn't. That is the definition of a definable edge. When you find something in the markets that under any set of circumstances or conditions, or a given set of circumstances and conditions, the market does one thing more often than it does another thing. That's called putting the law of probabilities in your favor. It's not trading from your gut or an instinct or a feeling. And when it comes to trading, it's a business. As a business, it's a business based on just that, probabilities. And in our own intellect and our own clever minds, we try to get in there and we try to see things. We try to turn to mysticism and witchcraft and voodoo, and we try to make it about something more than a probability, because we now, using probabilities, gives us the impression that we somehow can see the future. And I'm just telling you, we can't. God didn't give us that ability. I know there's Gene Dixons of the world, and there's people who, you know, for whatever reason, it seems like they can see the future. And I don't deny that God could give any one of us the ability to know the future. I've met a lot of people in my life, and I've never met such a person that God truly gave that gift to. I mean, we've seen lots of so-called psychics exposed. The one guy that used to bend the spoons, he even got exposed on national TV. I think it might have been on Geraldo or something. So let me just sum it up by saying, the moment you try to make it about anything more than a probability, you might as well hang up your mouse, because you're going to end up sad, mad, depressed, all kinds of things. So I'm getting a bullish cross right now, so we just got a new 30-minute candle at the top of the hour. I know that when price, if price, see, I had to correct myself, if price. Now, we know with certainty that price will pull back to the BBC. And if the market goes sideways, the BBC will rise to meet price. But the two are always going to come together. I can't tell you when, I can't tell you exactly what price, but I can tell you that price and the BBC will always come together. And if price does come together, here or here or here or here, the probability is that it will hold more often than it will not hold. Now, trying to second guess by saying, well, you know, this time I really think it's going to hold, so you just go ahead and put a buy order in at 28.05. Well, it's only a probability. What if this time it doesn't hold? Then you had a big fat losing trade on your hands. Why not wait for it to pull back, wait for it to hold, and that takes patience. And that's what most traders, they try to hone their skills with all different kinds of things, whether it be indicators, oscillators, you know, some kind of bands, or any other number of things. And that takes you away from the fact that it's just a business based on probability. So once price meets up with the BBC and it holds, and how do I know it's holding? Well, because it reaches it, and then it starts printing a green candle. Now, is it possible for price to look like it's holding, or actually be holding, and then suddenly fail? Absolutely. That's why nobody is a 100% trader. Just parking an order here and hoping it holds and hoping it then goes higher, that's just throwing money at the market. If you're patient, let it come down, Maybe it spikes it. Maybe it trades below it a little bit. But when you reach the point where it really does look like it's now trying to go higher, okay, if the market's clearly showing me that it wants to go higher, then let me try to go higher with it. Trading's not easy. I'm telling you it's not. But it can be that simple. But it can only be that simple if you're willing to allow it to be that simple. So that's what happened with the Concierge Trade Alerts for the S&P. On the Dow, the number was, on the upside, 243.05. The swing high was 234.20. So it actually went 15 points above the trigger and then failed. Hopefully, that's the better example that I could give you than the S&P, because the S&P failing 1 point below the trigger makes it look like magic, and the Dow shows you it's not, because it stumbled over the line 15 points and then began its retracement. On the Russell, the trigger to go long based on last night's Concierge Alerts was 1248. Okay, and we haven't even come close to that yet. On the NQ, the long trigger is way up at 90.72. On crude, we triggered long 26.15, and the thing just ran away from 26.15 to 27.15. That's $1,000 per contract traded. Price pulled back to the BBC. Now remember, there was a big red candle here, so that probably was like, oh, this isn't holding, because you had a big red candle. This wick was once a red candle, but before the 30-minute period was over, it retraced. Then you had another 30 minutes, and another 30 minutes, and another 30 minutes, and then, so that's 1 hour, 2 hours. Finally, on this candle, we actually closed back above the weekly trading zone. We closed above red and falling, and there you can see what happened. Now we put in the swing high up at 27.75. So if this thing were to make it to 28.15, that would be $2,000 per contract traded. On this pullback here, we didn't quite get back to the trigger. Let's see. On gold, price triggered at 17.30 and just kept running all the way to the weekly trading zone overhead, found resistance, and now it's trying to pull back. So that's going to do it for today. On the Logic 247 alerts, I'll just scroll through those just to give you an idea what they look like if you're new. We're in week 93. Last week, week 92, we had 78 alerts, 13 never triggered. 3 stopped out. That's an abnormally low number. We average about 20%. So 5% of actionable alerts stopped out. And we start Sunday night at 6 p.m. Eastern. Here's the S&P, the Dow, Russell, NQ, gold, crude again. Crude triggered in both directions. Ran to the target. It's the NQ. Z's means it did the trigger. Thumbs up, of course, means it did. More no triggers. And I didn't put out any alerts yesterday. This one stopped out. More thumbs up. And this will bring us up through Tuesday night. So that's what's happened so far this week with logic. All right, good word for the day. Tim asked, on the way back up, will prior obstacles still be in play, or will the fact that price moved through them have already softened them? Well, I guess I don't know what you mean by a prior obstacle. I mean, I drew these on today, and we did move up through them. Not by much, but we did move up. So I'll have to give that question some thought and maybe come up with a better answer for you. Okay, the last time we spoke, we talked about an attitude adjustment. In fact, we talked about that twice, I believe. Today we'll talk about the need for repentance. 2 Corinthians 7:10. Godly sorrow produces repentance, leading to salvation, not to be regretted. There's a difference between confessing your sin and repenting of it. In Scripture, the word repentance means to turn away from sin. By confessing your sin, you acknowledge what you've done. By repenting, you turn away from it. And the good news is there's no limit to God's forgiveness. The moment you ask for it, you receive it. However, God doesn't intend you to keep repeating your sinful patterns over and over again. That's where godly sorrow comes in. Paul writes in 2 Corinthians 7:11, "You sorrowed in a godly manner. What diligence it produced in you." The purpose of godly sorrow is to make you more diligent when it comes to changing behavior. When you allow sin into your life, you violate your core of righteousness. 2 Corinthians 5:21 says, "For God made him who knew no sin to be sin for us, that we might become the righteousness of God in him." At the point of salvation, God literally made you the righteousness of God in Christ. You're a regenerated spirit living in an unregenerated body, and when you permit sin into your life, it violates the very core of who you are, and that will cause you godly sorrow, leading to repentance and turning away from sin. Don't settle for saying, "This is a bad habit I can't break, but it's okay because God will forgive me." Yes, he will forgive you, but he doesn't want you to settle for a cycle of sin, repentance, forgiveness, and then repeating the same sin. He wants you to be strong and effective in his service. That's why he's calling you to a higher level. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.